Hey there, in this week's weekly mixtape and week in review, we'll be discussing the end of the first quarter, Brexit, 4% interest rates on mortgages, Lyft's IPO, and a small rant by me about IPOs. Stay tuned. Hi, I'm Justin Costelli of RLS Wealth Management. This is all about your Benjamin's weekly mixtape and week in review, coming to you live from the RLS Wealth Management Fitness Center, aka my garage. A rainy day, still trying to catch up from my trip from California earlier this week. Decided to sleep in a little bit and then be dad, so we're going to do the video from here. Hate the basement as a setting, so I like this a lot better. You're also going to see me cheating a little bit, looking down at my iPad. Usually I have this in the background or written on my whiteboard, so you can't see my cheat sheet, but today you're going to be able to see it, and that's okay because ultimately the most important thing is me giving you news. So let's get to this week's news. Kind of a light week, so I don't have a lot to talk about. I am going to add a little rant at the end about IPOs, but I think I'm going to start a new segment, and it's going to be looking at the week's headlines and how moody the headlines can get for the market depending on what day we're reading it. So I did this last week, I'm going to do it again this week. Monday's headline, stock market trips on global growth fears. Friday's headline, U.S. stocks rise, notching best quarter since the crisis. So as you can see, in the matter of the beginning of the week to the end of the week, again, if you're using headlines to gauge what's going on and what your decision making should be, you're gonna get whipsawed around. Keep in mind that headlines are a snapshot, a moment in time, that day's news, and remember that they're gonna be writing those to elicit the emotions of you when it comes to money. So they're gonna be having those dramatic headlines on both sides of the spectrum. Keep in mind the negative headlines are gonna, they're gonna make you feel more nervous than the good headlines are gonna make you feel good. That's just the way our minds are wired. So be aware of using these headlines to gauge anything and finding any meaning of them, and don't make decisions off of that. Let's get into the headlines, actually, especially Fridays. Your end of the first quarter is here. Can't believe that already. And as the headline tells you and the article below shows, the market ended up on a high note, the best quarter since the financial crisis, as we heard. The whole point of me bringing this up is to go back to why we invest, why we have a financial plan, why we have an investment strategy tied to the financial plan, and how we should not let momentary movements in the market impact our portfolio. The losses from the fourth quarter have already pretty much been made up in just the first 3 months of the year, assuming you stayed in the market and didn't deviate. And I know there are going to be a lot of investors out there who in November and December got spooked, moved things to the side. I understand why, because the headlines were there. We're a long way into a bull market. It's been 10 years of up markets. Maybe this is the next big thing. The headlines come in and it makes you make an emotional decision. Don't beat yourself up over that. There's nothing you can do about that now. What's happened in the past is in the past. We've got to learn from that and also figure out what's going to be your strategy of getting back in the market to get back into your plan. So hopefully you haven't missed out. If you have, don't beat yourself up. Talk to your financial advisor, work with a financial advisor to figure out what's the game plan going to be, what type of investment strategy do you need for your plan, and what is one that you're going to be able to stick to the next time the markets act a little bit spooky for us. So I'm not going to hammer that home much more because we've talked about that a number of times. Next up is Brexit. We've talked about this a few times over the last month. I bring it back up just because it's in the headlines again. The votes are coming up. It doesn't look very promising. I believe May is going to be stepping down and resigning. So a lot of news going on there that isn't really impacting the markets, which is okay. But I bring it up because remember what happened when the Brexit vote initially happened. It was a big move in the market. It was a negative story, a lot of negative headlines coming out, and the market went down for a little while. So there's probably going to be more stuff coming out. And if you're a globally diversified investor like I think you should be, this is going to potentially impact your portfolio in the short term. Again, understand what's going on, know why your portfolio is moving the way it might be, and the more you understand and know what's going on, I think the easier it is to stick with your plan that's tied to your financial plan. Mortgage rates coming back down towards 4%. Why do I bring that up? Well, if you bought a house in the last year, you may have been up closer to 5%. And from a financial planning standpoint, it might make sense to start looking into, should you refinance? I'm not here to tell you if you should. I think you should talk to a mortgage broker if you're above 4%, and then crunch the numbers. Don't refinance just because interest rates have come back down. It may not be worth it. Make sure you see what are the closing costs going to be. Are there any prepayment penalties for refinancing a mortgage you took out in the last year? How long will it take you to recoup any of those costs with the lower payment? And make sure it makes sense. If you're not going to stay in the house long enough to recoup those costs, then just stick with the interest rate that you have. But if you can see a break point and it's or a break-even point and it's close enough and you're going to stay beyond that to where taking this short-term cost will be offset in the long run by the savings in your payment, then it might make sense. Will rates keep on falling? I don't know. So talk to a mortgage broker, talk to somebody that's a professional in that area, and see if it makes sense for you and your plan. But it makes sense to look at that, I think, if you have a rate that's a little bit higher if you bought in the last year. Finally, Lyft's IPO. So Uber's competitor beat them to the market, as we already knew that was going to happen. Uber listed on Friday. The stock went up. It closed on the day up. But if you bought in the first hour, if you bought earlier in the day, you were already at a loss because it did not close at the highs for the day. And I want to bring this up because IPOs are very exciting. You think you're getting into this new investment. You see the future for it. It's got a lot of publicity behind it. But IPOs are a tricky investment, and honestly, I don't think they're the best place to be investing because they're extremely risky. When you are investing in an IPO, the first time the stock comes to market, IPO, initial public offering, you are not going to be seeing those gains that CNBC is showing you. That 20% pop, you are not entitled to because you are buying in the secondary market. Those gains have already been made. The gains that you're seeing there are for the people who invested early on when it was private before you and I even had a chance. So yes, there's the opportunity and potential that maybe you buy and get lucky, but it's going to be pure luck if you're making money on an IPO in the first day most of the time. So this is not investment advice. I'm not going to tell you what to do when IPOs come out other than exercise caution when you're investing in them. Don't get caught up in the hype of it being an IPO because there are more coming. We've got Slack, we've got Uber, we've got Pinterest, all these other companies that we know and love and we feel a tie to because we use them every day. Doesn't necessarily make them a good investment. And you know what? There's actually probably little harm to sitting it out for a little while, letting all this craziness and the people who make bad financial decisions ride these stocks in, let it settle, and then you can use your research and your plan to determine if it makes sense to invest in it. So Lyft's IPO went off. It went good. There were no issues with any delays. It closed up. So everything looks good. And I do think that is a positive for the overall market. But for an individual investor, and we're talking about long-term planning and retirement planning and financial planning, you want to be careful with these IPOs. Don't feel like you missed out. Don't get caught up with FOMO and chasing these things real early on because usually they don't have a good outcome in the short term. Long term, maybe they do. All you need to look at is Snap. Look what happened with Snap when it went public a year or two ago. I can't remember how long it was ago. But that is what I think would be more of a normal on these high-flying unicorn companies that are technology. So don't get caught up. And another thing on this topic, because we're having some IPOs and these technology companies are real exciting, does not necessarily equate back to the 2000 tech crunch. We're not having all of these small companies come public. These are big companies. They've been private for a while. They have a lot of funding before. They have a business model. So don't let this talk that potentially these tech companies mean we're going into another tech bubble. It's a different scenario this time. So that's it for news. March Madness is going on. Hopefully you've been watching. There've been some great games. My bracket got busted. North Carolina's out. I had them winning it all. I've been a Tar Heel fan forever. We will continue to watch them, continue to watch Duke, even though as a Carolina fan that's hard to say, but can't get enough of Zion Williamson and his effort and him on the court. So hope your bracket's not busted. Hope you're enjoying the game. One thing to let you know, there will be no video next week. There will still be a mixtape, but we're going to be in Washington, D.C. for the FinTwit meetup on Thursday, but it's also our spring break, so we'll be going to be making a little vacation out of it, seeing on the sites of the city. So I will still have a mixtape for you to read, but probably no video, so I will see you in a couple weeks. Thanks for watching. Thanks for listening. If you're listening to this on your Amazon device on Sunday morning, be sure to subscribe to everything, the blog, the podcast. Send me comments. Send me things you'd like to hear covered. Let's have some more engagement in this relationship so I can make sure I'm bringing you the things that you find valuable. And as you can hear, I've been joined by the boys. So that's time for me to get up and be done. So thanks for watching, and I will see you in 2 weeks.